Hey everyone, welcome back to Corporate Decoder, the place where we take these boring corporate filings and turn them into gold, or at least something that might make you a bit more money than a loose change jar. Get ready because we're about to unwrap a rather exciting initial funding event that might surprise you. Before we dive deep, if you love getting clear, no fluff analysis of these financial documents, make sure you're subscribed. And hey, we've got a fantastic community over on Discord, linked in the description below where we break down these insights even further. This filing looks like a current report, a Form 8K, basically a company telling the world about some big news. And for Emmis Accession Corp, the big news is they've just completed their very first public offering, their IPO. Think of an IPO as a company deciding it's ready to play in the big leagues by selling pieces of itself, called shares, to the public for the very first time. They're raising a significant chunk of money to fuel their future plans, which usually involves some kind of acquisition or business combination. The report itself is dated officially as the 29th of September, but the earliest event they're talking about happened on the 26th of September 2025. This is when everything officially went down with their IPO. The company we're looking at is Emmis Accession Corp, and they're incorporated in the Cayman Islands. Now, being incorporated in the Cayman Islands is pretty common for these types of companies, often called SPACs or Special Purpose Acquisition Companies. They're essentially shell companies created with the sole purpose of raising money through an IPO to then go out and find another company to merge with, taking that target company public in the process. So, what exactly did they sell in this IPO? They packaged up what they call units. Each unit is like a small bundle containing two things: one share of their Class A ordinary stock and one share right. This share right is pretty interesting. It gives the holder the right to get a fraction of a Class A ordinary share later on, specifically 1/10 of a share when the company successfully merges with another business. The actual shares themselves have a very small par value, just a tiny fraction of a cent. This is common and doesn't reflect their market value. They've also got their shares and units listed on the Nasdaq stock market, which is a pretty well-known exchange for technology and growth companies. Emmis Accession Corp is identifying itself as an emerging growth company. This means they qualify for certain regulatory flexibilities and are a newer company in the public market. They've also indicated they'll be using the extended transition period for complying with new or revised accounting standards, which is typical for these kinds of companies as they navigate their early stages. This section dives into the specifics of their IPO. Emmis Accession Corp sold 11.5 million units in total. What is neat here is that the underwriters, the banks helping them sell these shares, actually bought an extra 1.5 million units because there was so much demand. That is a good sign. Each unit was priced at $10, which means they brought in a whopping $115 million. This money is intended to be used for their future business combination. They've signed a bunch of agreements in connection with this IPO. One of the key ones is the underwriting agreement with Bankers Securities Inc., who acted as the main representative for the group of banks selling these units. There is also a share rights agreement with V-Stock Transfer LLC. This formalizes how those share rights we talked about will be managed. A really important agreement here is the Investment Management Trust Agreement with Equinity Transfer Company LLC. This is crucial because the vast majority of the money raised from the IPO, that $115 million, is going into a trust account. This trust account is designed to hold the funds safely until the company finds a business to acquire. It is a safeguard for investors. They also have a registration rights agreement. This agreement essentially grants certain shareholders the right to have their shares registered for resale in the future, which can be important for liquidity. And then there are a couple of private placement units purchase agreements. One is with Emmis Capital Sponsor LLC, which is likely the sponsor of the company, the people who initially put the company together. They're buying units directly. The other private placement agreement is with iBankers, the underwriters. There is also a letter agreement involving the company itself, its officers, directors, and the sponsor. These kinds of agreements often lay out the terms of their involvement and commitments. And finally, they have indemnification agreements with their directors and officers. These agreements essentially protect these individuals by stating the company will cover certain legal costs and liabilities they might face while serving the company. It's standard practice to ensure talented people are willing to take on leadership roles. There is also a Business Combination Marketing Agreement, the BCMA, with iBankers again. This likely means iBankers will help Emmis Accession Corp in finding and marketing a potential business to merge with. This section talks about those private placements we just mentioned. Emmis Acquisition Corp sold a total of 367,500 units in these private sales, directly to the sponsor and bankers, also at $10 per unit. Importantly, no underwriting fees or commissions were paid on these specific sales, which is typical for these private placements to insiders. On top of the units, the company also issued 75,000 Class A ordinary shares to bankers, and these are called representative shares. These shares are subject to a lock-up period of 180 days. This means the recipients can't sell them for 6 months after the IPO starts trading. This is a common way to prevent insiders from flooding the market with shares right at the beginning, which could drive the price down. These private sales are exempt from the normal registration requirements of the Securities Act. This is because they are considered private transactions not involving public solicitation. This section confirms that on the 24th of September, they entered into those indemnification agreements with all their directors and executive officers. It's just formalizing that protection we talked about earlier. Also, on the 24th of September, Emmis Acquisition Corp filed its amended and restated memorandum and articles of association with the registrar in the Cayman Islands. This is like updating the company's core governing documents to reflect its new status as a publicly traded entity and finalize the structure for the IPO. And here is where we talk about putting the money to work, or rather, not putting it to work just yet. Out of the total IPO proceeds and the private placement unit sale, a significant amount, $115 million, has been placed in that US-based trust account at Equiniti Trust Company, LLC. The remaining $3.67 million from the private placements went to the company's working capital, which will be used for things like paying off offering expenses. But the key takeaway here is that the money in the trust account is pretty locked up. It can only be released for a few specific reasons. First, if they successfully complete their initial business combination. Second, if they can find a business to merge with within 24 months, the money will be returned to shareholders. And third, under certain shareholder voting scenarios related to the redemption of shares if a business combination is found. They also issued a press release on the 24th of September announcing the pricing of their IPO. And then another press release on the 26th of September to announce that the IPO had officially closed. Now, looking at the exhibits section, this is really just a list of all the documents we've discussed, like the underwriting agreement, the trust agreement, and those important press releases. It is like the appendix of the report, providing the actual documents for anyone who wants to dig even deeper. And finally, the signature section. This report is signed by Peter Goldstein, the Chief Executive Officer of Emmis Acquisition Corp, dated the 29th of September 2025. This confirms the company's leadership is attesting to the accuracy of this filing. So, what is the big picture here? Emmis Acquisition Corp has successfully raised a substantial amount of capital through its IPO, positioning itself to pursue a business combination. The structure with units and share rights is pretty standard for SPACs, and the cash raised goes mostly into a trust account, providing a layer of protection for investors until a deal is struck. The lock-up periods for the representative shares are also a positive sign, indicating a commitment to a stable trading start. The key thing for investors to watch now is the company's ability to identify and execute a successful merger. The clock is ticking, as they have a limited time frame, 24 months, to find that target. If they don't, the money goes back to the shareholders, the big risk. As with any SPAC is that they might not find a suitable acquisition, or that the business they acquire may not perform as expected after the merger. But for now, they cleared the first major hurdle by successfully going public. Alright, that is our breakdown of Emmis Acquisition Corp's latest filing. What's your take on these SPAC structures and their future prospects? Do you think they'll find a great company to merge with? Drop your thoughts in the comments below. If this deep dive was valuable to you, hitting that like button really helps us out. And subscribe for more straight up corporate insights. And don't forget to join our Discord community, linked in the description for even more discussions. Thanks for watching, and we'll see you next time on Corporate Decoder.